You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
We did not get caught up in that move to 2150, and then the big reversal day happened on that same session. So when you get a reversal like that, you're going to have to look for more downside. So it was a fake breakout, a false breakout, so to speak, and a lot of times those will lead to bigger moves to the downside or some kind of a pullback or correction. So what it did was it was a bull trap, and it got everybody on that side of the chart. I did not bite on that one, and I'll just let gold pull back a little bit more. I think we have some interesting levels below us that will likely get tested, and then it's off to the races for gold.
It's Mining Stock Education. I'm Bill Powers, speaking today with my friend Nick Santiago, master trader over at MiningStockEducation.com. Nick, welcome back onto the show. Let's talk gold. We've seen some volatile action in gold, even breaking into an all-time high. And if we look back and we see a multi-year triple top and that being broken through, why after breaking through didn't it continue to run? Because previously you've told me that the most bullish thing a commodity can experience is an all-time high.
Yes. But one thing you have to watch for are the chart patterns and the time frames. So sometimes on a daily time frame, it looks really, really good and interesting, like it's going to have a breakout. And then sometimes the weekly chart, monthly chart, or even a quarterly chart can actually tell you something different. So what I had told my members were, when we didn't have the breakout at the end of November, I said, unfortunately, we're going to have to wait till the end of December, and that will confirm the breakout to me. So we did not get caught up in that move to 2150, and then the big reversal day happened on that same session. So when you get a reversal like that, you're going to have to look for more downside. So it was a fake breakout, a false breakout, so to speak, and a lot of times those will lead to bigger moves to the downside or some kind of a pullback or correction. So what it did was it was a bull trap, and it got everybody on that side of the chart. I did not bite on that one, and I'll just let gold pull back a little bit more. I think we have some interesting levels below us that will likely get tested, and then it's off to the races for gold. But, you know, the markets have a tendency to fool most of the people most of the time. That's kind of what they're designed to do. But that's why you have to really learn the technicals. You have to learn the chart patterns, because if you don't know them, you know, people will go ahead and buy those all-time highs, and you don't want to do that.
So that pullback number you were looking at, it was the 1600 handle. Is it now the 1700 handle in light of the breakout we just saw and then breakdown?
I would think if we have a sharp breakdown, we have a lot of support levels below that we have to get through. 1930 is a key level on the daily chart. I think 18, I wrote it down here. Yeah, around 1860 would be another key level. Then you'd probably go down and test 1675, 1680. That would be probably the bottom. And that would be where a lot of people will be scared to get into gold at that point in time. But that would be where you really want to load the boat, or else you could wait for the breakout to occur. And, you know, obviously that would be above, 2100. But I'll be a buyer down there. You know, if it gets there, I'd nibble I'd actually buy a lot down there.
So the gold miners are lethargic compared to what the gold price has done in the last week. What does that say to you, Nick?
Yeah, the gold miners need to lead. When the gold miners are not leading, that was another thing that kept me away from biting on that move. Now, I was just in silver recently, and I had a run up into silver. I made a quick over 10% very, very fast, and then I got out and I sat on the sidelines. But what happened was the gold miners are not leading. Silver miners are not leading. They need to lead. When they lead the actual metal, that is the bullish indication that the metal has a long pull ahead of it, meaning it's going to run for quite a bit of time. But when they're not leading, you know, you want to be a little bit guarded, because there's a lot of manipulation that goes on in the gold markets, right? Central banks have been buying gold. We see all of these news items where China is buying gold. India has always been a big buyer of gold. Our own central bank is buying gold. You know, now we're hearing all of this stuff. It's never what it seems. I'm never smart enough to figure out this entire puzzle. But what I am smart enough to figure out is the chart patterns. And that's why I just have to stick with that. But the miners have not been leading the metal, and they need to lead the metal. When the miners start to lead the metal, that tells you there's a bigger move in the metal and a longer term move ahead of us.
What about silver? It almost touched 26. Now it's back under 24. What's your downside target for silver?
Yeah, silver's bottom's been made. That was made in September of last year of 2022. So I think silver, gets down to 1850. I mean, buy all the silver you can because you have no idea about the run it's going to make. It's going to be incredible. It'll go to the mid 30s. It'll hover there for a little while, take a little pit stop, little break. They'll change the wheels and they'll get it ready to go above 50. So silver's low is already in. I was a buyer down there when it went to 1750. We loaded up with physical metal too. So, not just the paper products like the SLV and things like that, but I was buying, the actual physical down there. And you're going to get another chance, $19, $18.75, load up again, buy physical as much as you can afford.
What about the 2 and 10-year treasuries? What are they speaking?
Well, today you got a pop in both of them, but the 2-year is really what everybody should follow. I know the news media will focus on the 10-year. I've told you about the 2-year long before anybody else was even looking at it. Now you hear all these talking heads on the TV talking about it all the time. But the bottom line is, as long as that 2-year treasury note yield is not creeping up into the Fed funds rate, which is at 5.25%. Right now, the 2-year, I believe, trading at around 4.6%. That gives the Fed some wiggle room. They could sit on the sidelines, and hence you could get a little bit of a rally. But we still have an inverted yield curve out here that has not changed. In fact, the spread between the 2s and the 10s has actually widened. So, people are rejoicing and they're getting all happy. And, it's seasonality. You get this rally and stuff, but the bottom line is when that 2-year starts to creep up above 5%, there's going to be problems out here. And that's what everybody should focus on and watch. Right now, the Fed has got a meeting coming up on, I believe, Wednesday, the 13th of December. They're not going to do anything. They got wiggle room. So he's just going to sit pat. He's going to talk a little bit. But don't worry about what they say. Just worry about what the market tells us. And right now, the 2-year is below that Fed funds rate at 5.25%, and the markets are okay right now.
You and I are chatting midday Friday, December 8th. For context, for those that listen later on YouTube, oil dropped below the 70 handle, Nick. Now, you said if it gets to 55, you're going to be buying with both fists. But I believe you told me that you'd have some interest at 70. It dipped under there to $69. Are you interested in oil here?
Yeah, I own it. I bought oil 2 days ago at $69.30. I'm already up pretty nicely on the trade. And, I think oil's going to have a nice little bounce here. It's funny because, now we're getting news that the U.S. government is starting to fill up the Strategic Petroleum Reserve. Notice how it's Options X next week, and this news just hit the wires about 30 minutes ago. So, I bought oil 2 days ago because I thought $69 was going to be the number for a bounce, and I own it right now. So far, so good. But, yeah, I still believe that $55 is going to be a key level. I think this bounce will probably hold up for a few weeks. And then, if we start to revert and we take out the 69 level, we're going to 55. And nothing has changed. You get to 55, back it up, pick it up, dig a hole or empty the water in your swimming pool, fill it up with oil. Because that's the level. That's the level.
That's a good one. Fill it up with oil. All right, nat gas, Nick. Now, this is the Widowmaker trade. You've been bullish on nat gas, but like so many commodities, man, they go lower than you would expect it, and nat gas is on another downtrend, isn't it?
Yeah, but if you look at nat gas futures, we bottomed 8 months ago. We've had an 8-month rally. It just hasn't,
The UNG doesn't look good, though.
No, but the UNG is different, right? So if you look at the UNG, and I've been in and out of the UNG on and off, and I've made money every single time. Now, I'm not in it currently, because I knew we were going to have a pullback. I looked at the chart pattern, and the chart pattern said, well, we're going to go lower. But we were up for 8 straight months if you look at nat gas futures chart. And that's what I key off of. The UNG is a skewed vehicle like all these ETFs are. Unfortunately, that's just the way it is. You could be right on your call, but be wrong. So if you're not trading the futures, you play a vehicle like the UNG, which is going to be more affected because it goes out to further contracts, and it doesn't correlate with the spot price. So, sometimes if the nat gas is going up, yeah, the UNG works out really well and you can get a nice percentage gain. Sometimes you even get a better percentage gain than you would actually get from the commodity. But on the flip side, when nat gas pulls back, the UNG will pull back. Same with that boil product or KOLD, the cold product. These products are all skewed, but this is why you have to look at the charts and you say, all right, I got to get out now. And that's what I've done. I'm not in nat gas currently, but I plan on getting back in pretty shortly.
So how did you play oil then? Did you buy the futures, not USO, the ETF?
No, I bought USO.
With call options?
No, I actually just bought it outright. I just bought USO. So the reason for that is that got down to my level. Oil got down to my level. The two were coinciding. The USO is a little bit of a better product than it was when oil went negative $40 at that one time. So it's more correlated now. And right now I'm up a few percent on the USO here. So I pretty much nailed the bottom to the penny. And right now oil's having a good day. I don't want to toot my own horn here because you never know what can happen. This is a humbling business, but I do believe oil has a little bit more upside to go here.
Are you in any base metal trades?
I am not currently in any base metal trades. So I'm sitting it out, waiting for a little bit more of a pullback. But at some point, I would like to get into copper. I just have
$3.15 a pound, right?
That's right.
That's your target still?
That is still the target. Nothing has changed. I'll be waiting for it. And when I get there, when it gets there, and it will, most people are going to be scared to get in, and they're going to be copper fear out there. But that's when you have to pull the trigger on these things. Bill, my style is not to be in a million trades. It's just to be in trades at the right time. So that's what I prided myself on my entire career. If I go back to September of 2022, and I gave the silver bottom to my members, and I gave it to them months in advance. And when we pulled the trigger on that, we made over 200% on call options. We made, 40, 50% on silver itself, so it was a gangbuster trade, but that's my forte. That's what I do. I get in when these things give us those big signals. In 2020, I got into copper. Nobody believed it. I just nailed I hit the ball out of the park because I got into copper when the signal gave it to me, and copper had a huge run up, went even higher than I thought it was going to go. So, again, we're going to get those opportunities. You're going to get a lot of opportunities in commodities going forward, and you want to be able to take advantage of them at the right time. But you got to be savvy. You got to use the chart patterns, and these are not easy trades. I don't ever want anybody to think that, but you're going to get those opportunities, and we'll see how people can react to it when it happens.
Do you have any go-to trades for tax loss selling season?
Not really. I don't have a lot of losses. So, for me...
you identify a sector, let's say, to where it's sold off. Do you target those short, maybe 10 to 20-day trades?
Not really. For me, everything is a trade, right? So it's all short-term for me. The only thing that I've ever held long-term is gold, and I've been in it since 2003, gold and silver. So, for me, if there's something out there that looks terrible, I may pull the plug on it. I just don't have those positions. So, it really, it's not something that I've spent a lot of time thinking about. Yeah.
So Bitcoin was $17,000 in January. It's $44,000 as we chat. Have you still not bought any Bitcoin, or have you nibbled at that? No,
I probably won't even dabble in Bitcoin. And I told my members several months ago, I believe, I can't remember the exact date, but I told them, hey, Bitcoin just failed a weekly bearish pattern. You could buy it. So I give them the indication if they wanted to buy it. And I thought it would go up to the low 40,000 range. And we're even higher now. It's about 44,000 on anticipation of a spot Bitcoin ETF. So I just find it ironic. The one asset class that didn't want to be regulated is begging for regulation. So it's just goes to show you that greed and fear move markets.
Are you still avoiding the volatility trade?
Yes, I'm still avoiding the volatility trade. I've actually called it pretty accurately this year, thinking that, we get some sort of pops at certain times, but it's just been skewed. It has not reacted the way it has in the past. I don't know if it's due to these, they have these zero option, same day, zero options trades. I don't know if it's part of that or what's causing it, but it just has not correlated or made the moves, the size of the moves that it used to make in the past. So when I don't have an advantage in something, Bill, I just discard it till I watch it and see, hey, it's back and I have an advantage again. So I don't really have a great advantage in volatility. And I don't think volatility's acting the way it has over, this year or even late last year, like it did prior.
What about the renewable energy ETF? Are you playing that at all in the last 30 days?
Yes, I played the ICLN, which is an ETF on, I guess alt energy. And I've had 2 nice trades with options. I think I made 25% or 30% on one trade and 35 again on another. So it's been good there. I've traded that, and I'll look to trade that again. I think that is putting in some kind of a short-term bottom for now. So I've done that trade twice, and I haven't re-entered it yet. But I'd prefer to do it that way than get into like First Solar or SEDG or one of these other alt plays. I'd rather do it with the entire group, the ICLN.
The market's hitting an all-time high. It looks like the Dow and the S&P again, Nick. I mean, does this ever stop going up? What's your trader's perspective on this?
Yeah, I mean, we had a good pullback from the end of July all the way to the end of October. That was a 90-day cycle. It's something I alerted my members to basically to the day. And I said, hey, we're going to watch for the market to go higher. At that point in time, I loaded up on some call options. I think I had, 5 different plays out there. One of them was Target. I made over 114% in. So, that's just what the market does. It creates short squeezes. Every pullback leads to a short squeeze. Every correction leads to a short squeeze. And we're in that environment. That's all that's going to happen, Bill, till this thing blows up. Because, when you look at it since 2009, every correction has led to a short squeeze. And it's masterful when you think of what the controllers, central bankers have done. They've just create pullbacks to lead to short squeezes. So that's all I continue to do. I look for these times where topping patterns are in place. Hopefully I could miss the time the downside. And if I don't catch the downside, I just wait for the pullback and I look for the short squeeze. And I know I pretty much got that right in October, end of October.
What's your best and worst trades of the last 30 days?
Well, my Target trade was the best because that was over 114%. In the call options, that's my best trade this year.
The big box store, Target?
Yes, TGT. Yeah. So I had that for a call option. I actually owned the stock, but I closed out the stock for a break-even trade because of the fact that they had earnings coming up. So as much as I liked it to go higher, I'm always very cautious with earnings, but I'll trade them sometimes with options.
Did you trade it just based on the chart, Nick, or was there something fundamental?
Just purely big. No, I don't use fundamentals at all. Fundamentals are a scam. They mean nothing. Don't ever use fundamentals for anything. That's ridiculous. It's money flow that causes stocks to go higher, and it's distribution that causes them to go lower. And the bottom line is when liquidity hits the market, stocks go up. When liquidity is taken out of the market, stocks go down. It's just that simple. Now, it's not easy to play that, but that's what you have to recognize and realize what moves markets. But I could care less about fundamentals. I couldn't tell you the PE ratio of a single stock right now, or the book value, or the EBITDA, or any other.
What about the color of their logo?
Maybe I could do that.
It's red.
Yeah. Yeah.
So do you see the volume on the chart, and that's the money flow you look to, or do you read an article and you see that?
No.
It's purely the volume on the chart.
It's not only volume, but it's pattern. So when you have certain patterns out there, that means that the institutions are accumulating. Now they're not going to come out and say, "Hey, Bill, we're accumulating Target at 105 or 110." They're not going to say that, but that's what they are doing. And if you look and learn these patterns, and there are a lot of them, then you can start to put together, "Hey, this is going to be a pretty good risk reward trade." I did it recently too. I had airline stocks. I had Delta Airlines, which is my favorite. That's like the JP Morgan of the airline. So I told the members, hey, they're beating this thing down, buy call options here, and it should trade up to $40. It was around $30. So we had another one there, we picked that up. And that's all you do. You just look where, they're going to beat something up, but stealth accumulation is taking place. It's not the easiest thing to figure out. That's why you got to spend time learning these charts. But the charts will tell you when it comes. And I saw the same thing with the alt energy, with the ICLN. And I had a few others too. So, again, it's always about the charts, never, ever about the fundamentals.
I was told that the best traders out there, or some of them, were the fuel traders for Southwest Airlines. Have you heard that before too, Nick? How that when they hedge and buy and secure in prices?
I have not heard that, but if they give me a call, I'd help them out. But I'm not. I wouldn't be surprised if that is the case. So a lot of these airlines now, they do a lot of hedging, and some of them actually own refineries. I think Delta owns a refinery. I think Southwest might also have a piece of a refinery as well. I can't remember or recall right off the top of my head, but it's a big product for them, right? To make jet fuel, it's a big expense. So they need to have a trader in there to do that work for them.
Did we cover your worst trade of the last 30 days?
I'm not sure what it was, Bill. I don't know. The last 30 days, I don't think I had anything that was terrible. So
what were you up on the options in the last 30 days then, to give listeners a feel?
I made about 200%. So
you made 200% in the last 30 days?
Yes. And
what are you on the year?
I don't even know. I haven't looked, but we're up nicely. We're probably up, 400 or 500, but I'm not even sure. I'd have to go back and look. At the end of the year right now, I'm just trying to find trades that are going to be quick. Stuff that's going to work out fast. But, when you get a big rally like we got in October, the last week of October, I was kind of, finding some nice trades out there that I thought would get a good pop. And, I had 5 trades and was, I think we made a little over 200%.
Okay. Any more end of the year trades that you typically do, Nick, as we conclude here?
No, right now I just have oil on. I own some Bristol-Myers call options. I actually like Bristol-Myers. I want to buy that stock. I think that could be putting in a bottom right now, and just being a little bit selective. I have the oil trade. So, I'm not looking at a whole lot. I own wheat, WEAT. I'm a little under my break even, but it's come back quite a bit. It's put in a big bottom. That I think is going to have a big move in 2024. So, I like things like that. And, I'll be watching all these commodities. I'll be watching gold and silver. Obviously, I'm going to get back into SLV or, some of these silver plays, and I'll get back into gold miners at the right point. Just not yet, but they're coming up.
Nick's website is InTheMoneyStocks.com if you'd like to check out his services. Nick, really appreciate you coming on the show. Merry Christmas to you, and I'll catch up with you in the new year.
Merry Christmas.